Okay, we're going to go ahead and get started here this morning. We appreciate you joining us. My name is Darrel Good, and joining me this morning is Todd Hubbs. We want to visit a bit today about the latest USDA numbers. We're going to kind of rehash the USDA production numbers, try to put them in perspective a little bit from a historical standpoint. We'll take a look at the latest Usda forecast for consumption of corn and soybeans for the upcoming marketing year. And then we'll spend some time second guessing all of those numbers and as everybody else does, and try to put together a balance sheet and a look at price prospects for the 2017-18 marketing year. As always, we look at this from a fairly high altitude. Our focus is clearly just on developing a balance sheet and the implications for price. We don't typically get into a lot of market recommendations and that type of thing, but we will talk a bit about the market structure for both corn and soybeans. As a reminder, you can ask us questions. You can enter questions as we go along. We look forward to that and being able to respond if we can. You can also download the presentation, and we will have the entire presentation available on our webpage shortly after our presentation today. So with that, we're going to go ahead and get started. I'm going to turn to Todd here and ask him just to take a look at the corn production numbers that we got yesterday and give us a little historical perspective and his own forecast of where yields might come out this year.
Thank you, Darrell. Well, I think it's safe to say the yield numbers yesterday were the big market movers, and USDA's 169.5 bushels per acre national yield on corn came in well above trade expectations and actually outside of the range of trade expectations. And, it seems high, it's down from last year, but it's still above what the conditional trend we have from 1967 forward of 168.2. Having said that, I think it's a lot higher than many market observers think it should be. We'll see. As we move through this presentation, you'll see the USDA's August forecast might be a little bit better than people think. But having said that, 169.5 was outside the range. When we look at trend deviations for corn, this year's deviations 1.3 bushels above trend. As you can see, there's a few big outliers. 2012 minus 33.8, but we're nowhere in that kind of range yet, despite what a lot of people think is going on, especially in the northern plains and the central corn belt. The USDA's estimates sort of what we could think of as maybe a reversion back to the trend line a little bit. I don't know what you think about that, Darrell, but back to trend sort of is the way I'm sort of thinking about it right now.
No, I think that's right. I think a lot of folks looking at the weather thought yields would come in a lot lower, kind of forgetting how high last year's yield was. So this is kind of a trend number, and as you mentioned, well below last year's record yield.
That's right. When you look at it state by state, the yields by state sort of reflect the weather patterns we've been hearing about in the news. You see the North and South Dakota are well down. Iowa's down, Illinois is down. The one that sort of caught me out was Indiana. I've heard a lot of talk about a poor corn crop there, and USDA's yields no change from last year. So I was a little bit surprised by that. You can see in the South, their yields are well up, some record yields down in Mississippi and Alabama. So overall, USDA's state-by-state forecast is sort of matching the weather we've seen. I find that Indiana might be a little bit of an outlier, and I'd be curious to see how that got calculated.
Yeah, certainly from a crop condition perspective, we've been looking at some fairly low ratings there, I think because of late planting and some excess rain. And so that was a bit of a surprise, I think.
Yeah, it was to me at least. Corn production set at 14.153 billion bushels on the 169.5 yield. Once again, well above the average trade guess and outside the trade range, actually. So with this large crop and what we're looking at for old crop carryout, we're going to have plenty of corn if this 169.5 actually materializes this year. Like Darrell said, we've seen some later planting, some replant. I'm not sure everything's in the same state of pollination. When we look around Illinois, I think there's a wide variety of where we are in crop production. Some are in milk. We don't know how the pollination went in a lot of places, and sometimes even within fields in Illinois. So while the 169.5s, I'm not open to arguing with it too much right now. I think there is some downside potential for corn yields if we move forward, which would lower production. When we look at the August corn production forecast and minus the trade guess, this year is one of the high ones. I find this interesting. The trade seems to be cyclical, Darrell. What do you think about those numbers? They're either high or low, and they do it multiple years in a row. But once again, this is the third straight year USDA has been above trade.
Yeah, it's kind of a surprise to me when I looked at the chart. You don't really keep track of that on a yearly basis, but it is fascinating that the market seems to get into a kind of a mode of some sort and has a hard time breaking
out of it. Yeah. But once again, this is a large one. The final corn yield estimate minus the August forecast, and this is where, everybody's second guessing the USDA's yield forecast, needs to look at this chart closely. The last couple of years, they've been within a bushel. And even over the last 5, it's been since 2012 where they've missed significantly high.
Yeah, that 2012, actually, that's the zero number.
Oh, zero, yeah, that's right. So, sorry, it's 2011, sorry. Yeah, since they missed significantly high.
There's in 2010 and 2011.
Yeah.
But you're right, in the last 5 years, USDA has been very close on August, and if they have missed, they've been a little bit too low.
They've been a little too low. So while that 169.5 seems outrageous to a lot of people, I'd say a word of caution about second guessing USDA's yield forecast based on their recent track record.
Right.
Harvested acres, and this is harvested acres of corn minus the August forecast. So having, we're looking at, they do miss, you know how much is going to go for silage. We don't know how many is prevent plant. So, there's some missing there. So we could see that number pop up. I think there's a chance this year that harvested acres may come down. I don't know how Darrell feels about that, but I don't think it'll be too many acres.
No, I think you're right that given the quality of the crop and kind of the dry end to the growing season, that we may lose a few acres harvested for grain. But I don't think it will be the big changes that we've seen that exceed 1 million acres, for example. A few 100,000 acres certainly would seem reasonable.
Yeah, and basically what I'm saying is that's not going to be a market mover for total production for corn this year, in my opinion.
So where we kind of end up then, Todd, is we don't want to second guess USDA's their yield number too much, but I think given that the growing season is ending on kind of a dry note in a lot of areas, would suggest that, excuse me, maybe that number could come down just a little bit. And I think what you'll see in our balance sheet is we trimmed it just down to 168 bushels. It would be our thinking now for where we may see that number go.
That's right.
The other part of the supply question is old crop carryover, and I want to spend just a minute. USDA did update their projections for the current marketing year consumption and carryover stocks, and it's always useful to say, are we on track to meet those numbers? So on corn, we first look at ethanol use of corn. This is a month-by-month corn consumption for ethanol for this marketing year, last year, and this year. And then for July and August, we see in the green there the consumption numbers that are needed to reach the USDA's projection of a bit over 5.4 billion bushels of corn. And what you see is that use needs to be just slightly higher than it was last year. And that's been the pattern so far this year. Every month we've been higher. For July, I did look at ethanol production numbers, and actually ethanol production for July based on weekly estimates is about the same as last year. But I think we may get a little more corn consumed because of a little bit less sorghum going into the mix as it did in June. So I think the USDA's number is pretty close, Todd, that we may vary, a few million bushels from that, but seems like we're right on track for that.
Yeah, I think that's right. Maybe 5 million, maybe we could see them shaded down. When you look at the weekly production numbers, we're still averaging over 1 million barrels a day. And that's been that way since April, basically. So
the other category of use we look at is the corn exported. And USDA's projection yesterday was unchanged from July at 2.225 billion bushels. When we look at exports to date, we're about 60 million bushels short of that, with 4 weeks left in the marketing year. Now, when we calculate exports to date, we use inspections, and then we look at the margin of the difference between export inspections and the census estimates of exports. And we have those through June, and they're running about 40 million bushels higher than inspections. So we've added those in. So we're 60 million bushels short, as I said, with 4 weeks to go. Outstanding sales certainly are large enough to meet that at 162 million bushels. We need to average only about 15 million bushels a week to reach the USDA projection. In the last several weeks, we've been over 38 million bushels a week going out of the country. So here's where we might differ just a little bit from USDA. We think we could actually see exports come in maybe 20 million bushels higher than what USDA has projected. And then finally, feed use. That number was left unchanged at 5.425 billion bushels. We have the official estimates based on stocks numbers of consumption during the first 3 quarters of the year, so we can calculate what fourth quarter use needs to be. And that is 645 million bushels. That's about 10% more than use during the fourth quarter last year. For the first 3 quarters, we've been running about 5% higher than last year. So 10% may be a little bit of a stretch, but with less wheat feeding, I think, and the continued expansion in livestock numbers, we have a good chance of reaching that. I think we're not going to change it, Todd.
I think that's reasonable. We have seen the livestock numbers expand quite a bit this summer. So I think they'll hit it.
So we should be able to forecast September 1 stocks fairly closely based on consumption to date, and what looks like maybe exports will be 20 million bushels larger than USDA has projected. But just as a reminder, even though we think we have a good handle on use and prospective September 1 stocks, we occasionally get a surprise in that number. And this is the history of looking at the September 1 stocks estimate minus the average trade guess. They were pretty close last year, but it's not unusual to see 50 to 100 million bushels difference between what you would expect and what you get in that report. So we'll see that at the end of September, but just as a word of caution that stocks going into next year will be a bit uncertain for a while. Taking that to the balance sheet, what we do here is we present in the first column USDA's numbers as released yesterday for the 2017-18 marketing year. Then in the second column is our attempt to second guess those a little bit. And here's where we have the 168 bushel yield that we would plug in. We would have a 20 million bushel smaller beginning stocks, and then a total supply that would be about 145 million bushels less than what USDA is projecting. Feed and residual use, Todd, we're bumping that up a bit, I think because of the continued expansion in livestock numbers.
I think, yeah, the continued expansion we've seen in the cattle market, hogs and broilers, across the board, really. And I think the wheat feeding, down a little bit. And even though we saw the sorghum crop maybe coming in a little high yesterday, I think we can bump that up a little bit. We've seen this growth quarter over quarter in the livestock sector. And while USDA's initial projection last year was quite high, I feel like it might be a little bit low this year based on the livestock numbers we're seeing. So yeah, we bumped it up 50 million.
Yep. Now, in contrast, on ethanol, we're maybe a little bit more conservative, thinking that domestic consumption of ethanol will probably be fairly constant during the year ahead, but a little bit concerned about exports. We've had a very robust record export year for exports of ethanol that have depended heavily on the Brazilian market. And that one is one that can come and go based on what happens to their own production of ethanol, which is highly correlated to what happens to sugar prices there. So I think because of perhaps exports backing up just a little bit, we've put in a bit lower number there. And then for exports, we actually have a bit higher number. We think exports will be down sharply from this year because of increased competition. And Todd, you indicated we're starting a little slow on new crop sales.
Yeah, as of this Thursday's release of export sales numbers, I mean, corn new crop sales are down 44% over last year. They're at 199.4 million bushels, which is down a lot. They're basically equivalent to what we saw 2 years ago. Now that could pick up, if we see this price reaction from the yield, and we could see it pick up. But we haven't seen new crop sales very strong. And in the last couple of weeks, even old crop sales in corn have been pretty weak. So we're not seeing it. But like Darrel said, down from last year, but we think a little bit higher overall, because I don't see any demand rationing happening, especially with this kind of yield level.
So bottom line is we would pencil in a smaller supply of corn, a little higher consumption, and about 220 million bushels smaller ending stocks, which would give us an ending stocks to consumption ratio of a bit over 14%. And then we would see the average marketing year price of corn a bit higher than the midpoint of the USDA's range that comes in at $3.30. And as we have in the past, we're not going to take the time to try to work through this again, but we have this model where we correlate price to the ending stocks to use ratio, but the level of that relationship we think depends on kind of the strength of demand in the corn market. We've had periods of very strong demand, periods of what we would call moderate demand, and weak demand. And the weak demand for the same stocks to use ratio would give you a lower price. We think maybe we're somewhere between the weak to moderate relationship. And if you work that 14.2% ending stocks ratio through the formula, then that's where we get the $3.65 average farm price. We would point out when we look at the structure of the corn market, this is the new crop bases in south central Illinois, kind of representative of what's going on here. We have seen all year long, when we look at harvest bids, we've been running, 5 cents or so lower than last year's basis. Kind of an average level, 30 under is pretty normal. So we do have a basis that's reflecting a fairly large supply of corn, I think.
Yeah.
And then we would point out that the corn market does have a carry at this point. I always look at the December to July carry as kind of from the storage decision. The market is, as of the close yesterday, is showing 23-cent carry there. So with a 35 cent basis, 23-cent carry, The market is suggesting a pretty decent return to storage of corn, particularly for the on-farm storage situation. The market would be saying that there is some positive returns to corn storage for the 2017 crop.
Yeah.
Let's go ahead and turn to soybeans then, and kind of run through the same scenarios again.
Yeah, the U.S. soybean average yield this year was, I think, the big shocker yesterday at 49.4 bushels per acre, well outside trade range expectations. And we've talked about soybean trend yield. I think we've beat it to death. We've had quadratics, we've had breaks. We're just going to talk about the linear now when we talk about deviations from trend. But 49.4 is much higher than most expected, even though it's down from last year. And I think as we move through this month, it's going to be key. I know Darrel and I have talked about it. We've still got this summer weather, this August weather coming in. It's been pretty dry in a lot of places. And soybeans are not necessarily, we've seen blooming at about 85%, but we haven't seen setting pods yet. So it's a big question about what kind of yield we're going to get, what kind of pod set we're going to get throughout the Midwest. This 49.4, I think when we think about the yield, Darrel and I have thought about putting it at about 48.5. We're thinking maybe for 2017-18, which is taking it down a little bit from USDA projections right now. When you look at trend deviations, the U.S. average soybean, this is also why we're a little bit cautious about discounting the USDA's soybean yield forecast. As you can see, over the last 4 years, their August forecast, this is trend deviations. The trend, we've been above trend for the last 4 years. It's been since 2012 since we've been below trend. And despite it being 49.4, which is down from last year, we're still 3 bushels above trend. And this goes back to, are we on a different trend line? We've been talking about it a ton. This is once again 4 straight years of well above trend for soybean yields. I don't know if Darrel, if you have anything to add to that. When we go state by state, it reflects the weather we've been seeing, and all through the Corn Belt and the Northern Plains, we've seen pretty significant yield decreases over last year, except for Missouri. And then when you go into the South, you see Mississippi and Georgia, record yields down there. And in the Delta region, they're up in yields. And I think sometimes we forget about the Delta region and how many soybeans they actually do produce down there, where we get sort of focused on the Midwest a bit, but there's beans down there as well. But overall, it pretty much reflects what we've seen in the weather patterns, despite that 49.4 yield bushels per acre. So we'll see. We do think it might be down a little bit. And, the next couple of weeks are going to matter a lot to that yield, especially for us here in the Midwest. Soybean production, once again, well above the trade guess at 4.381 billion bushels of soybeans. This looks like if this yield holds, it's one of the largest crop we've had due to the number of acres in play this year, despite what we've heard about weather in a lot of places that expanded soybean acreage, like the Dakotas and other places. So it's looking like a record crop right now. The USDA soybean production forecast less the average trade guess for August. Once again, the USDA is well above what the trade says. And once again, we sort of see a little bit of a pattern in trades missing USDA's forecast for production. Once again, the trade's well below, and this has been the case for the last 3 years.
Yeah, it's pretty substantial difference. It's amazing that typically the big misses have been in the other direction, but the last 3 years, not so.
Not so much. That's right. So here's what I want to talk about before, and I got excited about this because this is very interesting to me, how USDA's August forecast compares to their final yield estimate. And if we look over the last 5 years, their August forecast has been low. They've built up to what the final yield number was going to be. And this is sort of ties into this, have we changed the trend a little bit? But overall, over the last 20 years, they haven't been that far off low or high very many times. Now, I'm not saying this couldn't be the year due to the nature of the weather and late planting in a lot of places, but USDA recently has been low in August and built to the final yield.
Yeah, I think we've kind of lost track of that. And really, if you look at a longer period of time, going all the way back to 2007 or so, when they have been too high in August, it hasn't been very much.
It's not very much.
Right.
So it's a little bit of it should make people pause and think about when they're talking about how USDA, it makes me pause at least when I hear people discussing how bad this yield forecast is.
I think the important point you made, Todd, is that soybeans are pretty sensitive to how the growing season ends here. And, the survey work was done basically first of the month. And when farmers were reporting and USDA was in the field, it appears to me that August is not going to be the kind of weather that will bump that yield up. If we do see a change, I wouldn't expect it to be higher. Temperatures have not been exceptionally high, but we've had a lot of places that just stayed dry.
Very dry. August. Yeah. We've seen in the forecast, the 10 to 14 day, there's rain coming through a lot of places. But yeah, I think any change, I think, would be downward, not upward. When we look at harvest acres of soybeans, the final number minus the August forecast, once again, these change sometimes. We might see some prevent plant, we might see some acres go out, but I don't think this year, this number might come in. I don't think we're talking 1 million acres. I think it's below that and not enough to actually make a huge difference in the final production number right now, in my opinion. I don't know if Darrel has a different.
Yeah, I don't think there's any compelling reason to expect a big change at this point. A few 100,000 acres
here or there,
which would be typical, I think is reasonable expectation. Yeah. And so, as Todd said, we're going to use a slightly lower yield in estimating next year's supply of soybeans, 48.5 bushels, and we're going to use the same harvested acres. What about beginning stocks of old crop beans? Again, we look at two categories, exports of soybeans. USDA bumped that up a bit.
50 million bushels.
50 million, so at 2,150 million. With 4 weeks left, we're 80 million bushels short of that. Again, adjusting the inspections number by the difference between inspections and census through June, we're at 2,070 million. We've got almost 200 million on the books. So we've got plenty of sales there. We need to ship about 20 million a week to reach the 2150. In recent weeks, we've been right on that number. So I think USDA made the correct adjustment in yesterday's report. We're not going to argue with 2150 at this point. The crush, this is showing the last May and June crush of soybeans. The green is last year, the orange is this year. We dropped in May. Surprisingly, we came back equal to last year in June. I say surprisingly because the NOPA crush number would have led us to believe that we were below last year's crush in June, but the USDA number came in equal to that. And we need to stay right at that, equal to last year through the July and August to reach the USDA's revised lower projection of crush. So again, I think they made the right adjustment in yesterday's report. Increasing exports, lowering crush just a bit, and I think we're right on track. So we're not going to argue, Todd. I think
that's right. Yeah. I sort of expected I was glad to see him because that's how I saw it going down as well.
So again, we should have a good handle by the time we get there on what actual exports and crush was. But still, we do see historically that there is some difference between what you might expect for September 1 stocks and what USDA actually estimates. Typically, that's in the 10 to 15, 20 million bushel range. Occasionally, you'll get a surprise outside of that range. So we won't know until we know on ending stocks, but we should have a pretty good handle on that as we continue to get the weekly and the monthly consumption numbers. Balance sheet, again, running through the same kind of scenario as we did on corn. The first column is yesterday's USDA number, looking at ending stocks of 475 million. The midpoint of their price projection, $9.30. Our estimates in the second column knock yield down to 48.5. You get a smaller crop, same carry in, slightly lower, 20 million. Somehow that, yeah. So we get a smaller crop, 4697 rather than 4777.
Yeah.
We're going to second guess their consumption numbers too. They show a 50 million bushel increase in domestic crush for next year. We're going to back that off to a 30 million bushel increase. We're also a little bit concerned about the aggressive export number. We've questioned this in our last webinar, Todd, and we're a little bit concerned about two things. One is the large South American crop, prospects for another large crop in 2018 there. And I think you indicated a fairly slow start to new crop export sales.
Yeah, very slow. New crop export sales are down 49% from last year, and they're currently sitting at 258 million bushels. So we're off to a slow start. And, you know, with the large crop in South America and the potential for another large soybean crop in Brazil and Argentina, yeah, I think it might be a muted year for soybean exports. Not horrible.
Yeah.
Still a nice amount, but not as large as what USDA is currently saying.
Yeah, and we keep it large, even though we think there's going to be a lot of competition because of the Chinese market.
Yeah,
we're hopeful that holds together, continues to ramp up just a bit. So we get a surprisingly large ending stocks projection. I think 540 million bushels. That's 13% stocks to use ratio, and again, based on this series of relationships between stocks to use and price, if we're still kind of on the weak demand scenario, we would see a $9 average price rather than the $9.30 that USDA projects as their midpoint. Soybean basis, we do see, at least in this part of the world, basis is a bit weaker than a year ago. Last year, basis tended to strengthen as we got into the summer months. We were running about 25 under November futures for harvest bids. This year, we're about a dime weaker, 35 cents. So that on the surface would suggest maybe the market is saying there's room to store soybeans.
yeah.
But when you look at the carry in the market, it's
30 cents, right?
yeah. So is that correct, Todd?
I think so.
Yeah.
I'd
So
have to look it up.
let's take a look at this, whether if we have that kind of carry in the soybean market at this point. I should have looked at this a little more closely before we started, but take a close look at the carry. I mean, I was wondering whether the market is suggesting any kind of return to storage in soybeans. We'll get back to that in just a moment as part of the questions here.
Yeah.
So that kind of ends our formal presentation. And we, again, would like to see your questions that you might have for us on any of these topics, or perhaps others that we didn't touch on. we are seeing some questions about USDA's yield estimate or forecast and whether that's reasonable numbers. Particularly, people are pointing to the crop condition ratings and saying, do they really suggest yields at the level that USDA is forecasting? And the quick answer is yes, they do.
I know I have a little yield forecasting model on using crop condition ratings. I know a lot of us that do Outlook have those kind of models, and mine, I had corn yield at 167.6 and soybean yield at 47.9 based on the crop condition ratings. Yeah, when I saw the soybean yield, I was surprised, but it is hard to wrap your mind around the idea of it being that high based on a lot of the news we've heard about the weather and, looking out your own back door at your crop.
Yeah, I think one way to think about this that's helpful to me is if you look at the change in crop condition ratings relative to last year, we're down 14 points in the good to excellent category, only 60% good to excellent. Each point of good to excellent represents about 0.6 of a bushel on the average yield. So you're down 14 points. It would suggest you're down, a little over 8 bushels an acre from last year. But then they also have to recognize that we have a trend increase in yields, an annual trend increase of about 1.8 bushels. So this says, 6 bushels less than last year. 5 to 6 might be a good
That's
estimate.
Right where it is, right?
And 6 bushels is 168.6 bushels.
Yeah.
So yes, the crop condition ratings, I think, are consistent with the USDA's current forecast of yield. Whether those condition ratings hold up or not is the question, whether we see some deterioration as we go through the end of the growing season. So let me back up here. I'm sorry to question Todd's graph. I'm used to seeing an inversion in the soybean market. And
I don't mind it at all, Darrel.
And we do see a bit of a carry. So with a weak basis and a bit of a carry in the soybean market, this is a little bit of unusual situation where there may be a little bit return to soybean storage.
I was surprised too. I was on the radio yesterday saying this probably wouldn't happen. So discount everything I said yesterday. Yeah, a little bit of a carry. So
then there's a question about forecasting corn exports, and it says, have you fully considered the large South American crops when you increase U.S. corn exports above USDA? I mean, certainly we recognize that, and that's the main reason that we have exports projected at sharply lower than this year's exports, is because of that competition. But it's kind of a interesting situation where we have the same kind of competition increase for soybeans, maybe not quite as big a year-over-year increase in South America, and USDA projecting an increase in soybean exports, but a sharp decline in corn. And I recognize there is a difference that you have China in the soybean market, and the question is, how much U.S. corn does the world want? How much corn in total, and what share can the U.S. get? So we're not going to defend 1.9 billion bushels to the death, but I think it is a reasonable expectation at this point. Yeah.
And when you go country by country and start looking at the projections for imports globally, Japan seems to take the same amount of corn from us every year if we have it. Right. Mexico, pretty close to the same. Colombia, and I think we could see that build. It's going to be down from last year, but up based on the prices we're looking at as we move through the next marketing year. So yeah, like Darrel said, we're not going to get in a fight about it, but we think that's right. How do you feel these higher stocks to use ratios and lower commodity prices will factor into land values, given the USDA and others have said a bottom may have been reached. Well, we've seen land values, and it depends on where you're at. They've sort of flattened out over the last couple of years. I would hope that rental rates in a lot of places would moderate. When you hear people paying $300 to $350 an acre, and I mean that's between the landlord and the renter. But I think we're at a point in time that it's time to start thinking about moderating those. Having said that, I don't think you'll see land values go down. I personally don't think you'll see land values go down significantly, especially in the Corn Belt. But I don't expect it'll just be this gradual flattening out that we've seen. I don't know about it being at a bottom per se, but I don't see it collapsing. This is not the 1980s all over again, in my opinion.
Yep.
Yeah.
Yeah, I mean, clearly low commodity prices is not a positive thing
No.
for land values or rents, but and there's probably a little room for them to weaken somewhat further, but a lot of the adjustment has taken place at this point.
I think so.
An important question on the soybean carry is what is the net carry considering the cost of capital? Again, if you're looking just locally at a 35-cent basis relative to November, a 30-cent carry from November to July, then they're saying there's a 65-cent carry minus a normal summer basis of 10 or 15 cents. So there look like there's a net maybe 50 cents carry in the soybean market into next summer. $9 beans, that's a little over 5% carry. So if you're not borrowing money, you can earn 5% on farm stored soybeans. If you have to borrow money to finance that storage, then the net is closer to zero. Perhaps.
Yeah.
So it's going to vary by situation. And then a question that's close to home to me is how much does dicamba damage around the country impact overall yields? You're hearing a lot of report of that. And I think the key phrase here is damage. We're certainly seeing a lot of reports of symptoms of dicamba drift or volatilization. Apparently the jury is still out on what is the yield impact of that, all the way from a serious yield reduction to some want to argue that maybe it helped yield somehow. I'm trying to get my head around that a little bit, but
you got to think really hard about it. Yeah.
So I think overall, again, I would put it in the category of not a positive factor, but I think just based on anecdotal reports, we might get the impression that it's more widespread than it actually is. Probably not a major yield influencer at this point, in my opinion, but I'm certainly not an expert at all and wouldn't claim to make those yield adjustments. And then the perennial question about what if we get an early frost? What's the impact? Certainly, that's where you would have to say it depends. Over what area, how early, how severe is the frost? I think it would have to come fairly early relative to normal to do much damage to the corn crop at this point. Certainly, there would be some soybeans that would be vulnerable to frost damage if we did get an early one like we did in 1974. When September 10th, we got a pretty widespread killing freeze that did a lot of damage to both corn and soybeans, but those were late crops in 74, late planted, summer drought, and then an early freeze on top of that. I'm really not seeing anybody suggesting we're headed that direction this year, but anything that happens abnormally early would trim yields to some extent. And what is the correlate, coming back to the crop condition, Todd, maybe you can talk a bit about this. What is the correlation between condition ratings and yield?
Well, I mean, you sort of went through it earlier about how the relationship sort of between good and excellent. It really depends on how you build your model around crop conditions, and there are a bunch of them depending on how you do it. What you see is good to excellent will have a positive correlation with higher yields, right? It'll be correlated with higher yields, and the fair, the poor, the very poor, you would expect to have the opposite because of the nature of the crop condition reports. As far as what is the exact correlation, that's really a tough one to say. It depends on what kind of model you're building. And there are a lot of models out there. I have a different one. I know Darrel has one. Scott has one. Everybody has one. So the actual correlations have to do with the categories themselves and what the categories mean.
That's a good point. If you just do the simple model of what's the correlation between the percent rated good or excellent in the final report of the year, and the actual yield, that's the simplest model you can use, I think.
Yeah.
And for corn, there's a correlation of over 70% on that.
Yeah.
So, but that leaves a lot of unexplained yield. So I would never use crop condition ratings as my single and sole forecast of yields. I think it's provides important information, important guidance, but I would never rely 100% on crop conditions to form yield expectations. I think you have to consider weather and how weather unfolded, and that's why crop weather models, I think, adds a useful layer to forming those expectations. And when you do that for this year, quite frankly, when you combine models that are based on crop conditions and models that are based on weather to date, you get a yield very close to the USDA's forecast of 169.5. So another reason to not throw that forecast out too quickly this year, even though we do think that late season weather may take it down just a bit.
That's right.
And then back to the demand side, our final question that I see here is, do you see the U.S. getting more competitive for export corn in October, November, December? I think there's some indication that we could become more competitive because of lower prices, perhaps as we move through the harvest window and a period of weaker bases. But we still have that supply from South America to compete with. So I don't see anything specifically that would expect particularly our rate of shipments. Now we need to see our rate of sales pick up. And I think maybe a period of lower prices here because of the yield forecast by USDA and the market reaction may give importers an opportunity to step in here and be a little more aggressive.
I think that's right. I mean, if we see this price maintain itself for the next couple of months, I think we could see the export numbers be pretty competitive with our main competitors, and we could see a little run there in export numbers through October, November, December. But that's dependent on the price, of course. Well,
we're not seeing any more questions here at this point, so we're willing to shut it down. Todd, any final comments?
Well, just that this is Darrel's last webinar, and I hate to see him go, especially when he's talking about 1974 frost. I need that kind of information. So, Darrel, hope you have a good retirement.
Thanks, Todd. I apologize for my congestion here this morning. I know that's hard to receive out there, but I've enjoyed the webinars and enjoyed what I've done and also look forward to retirement. So again, go ahead, Todd.
Yeah, if you want to, you can submit questions. Well, we're done with the question, but you can download our webinar slides at www.farmdoc.illinois.edu/webinars. So it'll be out there and you can find them on the FarmDoc website. Thank you all.